We're having a bit more drill-down conversation with analysts at the Stock Exchange studios. But first, give us a minute to quickly run you through yesterday's first trading day for the Nigerian market. Global markets started off on a very positive note on Thursday, but all that has changed since this morning, since the U.S. airstrike at the Baghdad airport killed two Iranian commanders who were responsible, according to the Pentagon, for a number of thousands of deaths. That has since sent markets reeling. But this was where we shared part of the global stock market rally, or the first trading day of the year. 0.1% uptick for the Nigerian stock market composite index, and the market cap was a little bit shy of 13 trillion. If we keep up that today, which is the final trading day, perhaps we'll cross back to 13 trillion by Monday next week. In terms of volume, that's a bit consistent with our daily average. But if you look at the number of deals, that was an active trading day, more than 3,000 transactions for 5.23 billion. It means that investors came really hungry for the stock markets on Thursday, on the same day that the central bank also did the first primary market auction in 2020. All of that later in a bit. But then look at the key sectors, a bit of a profit booking on the banking sector. Consumer goods lost 1/10. Industrial goods was much deeper by 2.26%. Insurance went a different way from the other four major indices, 0.97%. Oil and gas, a negative 5.01%. You know the insurance story. They've gotten an extension from the sector regulator to extend their recapitalization deadline from June 2020 to December this year. That breather gave investors more time to look into these shares, and that was the major reason behind the insurance sector 1% gain on Thursday. So if you look at the oil and gas that bled, Seplat was 8.79% in the positive reading, but corn oil was down 0.54%, as that stock was included in AfriInvest dividend yield index with the rebalancing that we talked about earlier by the stock exchange. Then Forte Oil lost 0.5%. Again, Forte Oil was kicked out of the NSE 30 index yesterday, replaced by other companies. So Oando also got kicked out of the NSE 30, but the share price was unchanged at the end of the trading day. Quickly, the NESD market was a little bit lackluster, but there was strong volume, 29.07 million units on the first trading day of 2020. That's quite a big jump, but the index not yet able to get the 700 psychological reading back on track. You can just see but the market cap, of course, on the Naira value of what was traded on Thursday, that reading came back to 501 billion Naira. That's the primary market indicators for the NESD over the counter. Let's quickly check in with the treasury bills, which we'll talk more a bit later. We got the first primary auction yesterday. At the secondary window via the FMDQ, 4 most actively traded Nigerian treasury bills, 2.21 billion, not quite bad for the first trading day of the year. The open market operations was much bigger, but double-digit, 58.5 billion, and the Naira bond, 3.73 billion to start the new year. All of this will get through to our guest speaking to us from FMDQ Exchange Place later on the program. But let's get back to the stock market. We've had not a very good year. 2019, we were down about 15%. Over the last 10 years, the Nigerian market lost about 50% of its value. So between 2009 to date, the market hadn't really been strong, remains weak. Let's ask a few questions of Rotimi Fakaijo, who is a market analyst from our studios at the Stock Exchange. Rotimi, what's your outlook on the new year, considering where we're coming from?
Well, it's been 2 years in succession of negative ending for the Nigerian Stock Exchange Index and market capitalization. And I think maybe starting the year afresh in year 2020, there's quite some optimism. A lot of lessons were learned in year 2019, and a lot of policies emanating from the CBN also were there which ordinarily was supposed to favor the stock market, but that didn't happen. So we are hoping that those things that didn't happen last year will definitely begin to take its positive cue on the market in the year 2020. So the outlook for this year is such that the market needs to go deeper in terms of getting more investors into the market. The indifference that the investors did have in the year 2019 told so much about what actually happened at the end. So I believe strongly that we need to put on the thinking cap, see how we can woo investors back into the market, boost their confidence, and at the same time see how we can favorably harness the opportunities therein for the CBN policies, which has already made the economy to be, at least to a great extent, awash with liquidity.
When we say there's a stock market, what exactly makes a stock market really thrive for investors, whether they're retail or foreign or local institutional?
Well, I think we need to change the perception concerning the market, especially in the Nigerian stock market. Since 2008, 2009, the market has been very much dependent on foreign portfolio managers' participation. And I think that really has not augured well for us, though we saw some traction in the Osha index and market capitalization due to this. But the perennial effect, which had been very, very adverse, is such that the market goes up, and all of a sudden, when they pull out of the market, that is the foreign portfolio investors, the market comes down. So if we build the market more strongly with local participation, there is every tendency that whenever such shock arises, we are definitely going to at least assuage the shock. And that definitely will make us a stronger market.
Rotimi,
a lot of people are not in the market today because...
Rotimi, a quick one. But we've seen the size of foreign portfolio investment in our market a little bit sluggish. Then we've seen a bit more of local participation in recent years, if you go by the numbers that we get regularly from the stock exchange. The key question is, yes, we have more institutional investors, but retail investors, the 100,000, 500,000, 10,000, 50,000 naira investors are the ones I am really interested in here. The big boys, the PFAs, the annuities, the insurance folks can always take care of themselves, the banks.
Well, I think we actually missed it out on the retail investors. Or equally so, we missed it out on the institutional investors within the country. Hardly do you have any viable insurance company investing in the Nigerian stock market as at date. A lot of them have fled the market, and they're not even thinking of coming back. So I believe strongly that with more participation, we will have a better performance for the Nigerian stock market. And what will bring about more participation is regulations that will, to a great extent, as we used to have it in the past, compel institutional investors, especially the insurance companies and also the PFAs, to actively participate in the market. If all this happens, then definitely it will also boost the participation of the retail investors. A lot of retail investors are not in the market because of the volatility of the market. Not that the fundamentals have gone wrong, but the volatility in the market has made everybody to take shelter in some other investment windows. So I believe strongly that the institutional investors and also the PFAs, we definitely have to have a rethink, and there needs to be regulation that will compel them to actually participate, and I believe strongly that that will go a long way for them. If they are looking at money market instruments, I believe the dividend yield from some companies as at present price is definitely much more than what we accrue to them from money market instruments.
Great. So what about the SEC, I mean the regulator? It's been trying to do a couple of things within the NCM, the Capital Markets Roadmap 10-year program, which is about halfway into that program as we speak, the e-dividend, the e-offering, and dematerialization. We've done that. And we're working on some other programs such as re-registration or put together integrating your accounts for what you call those multiple share registration. Do you think this, which goes basically all of this going to the retail investors, will help re-energize, reinvigorate retail investors to put in extra cash or reinvest what they're putting out back into the market?
To a great extent, that definitely ought to, but we are not seeing that actual result for now. The e-dividend, the dematerialization, the coagulation of multiple accounts for investors, and maybe several other things which the SEC has put in place have not really yielded the required results. And I think, to me, we need to widen the reach to investors. A lot of concentration are here in Lagos, Port Harcourt, Kano, and Abuja. But how about the interland? Hardly do you find a stockbroking firm in most of the states. This definitely, if they have to do any transaction, they have to come to Lagos. So if we are going to take a leap above that, we need to look strongly on how to use technology to navigate this. I believe strongly that with BVN, definitely we should be able to do a lot of things which will, at least to an extent, step down on KYC requirements such that investors can actually register with stockbroking firms online and also get entangled with CSCS without necessarily having to leave the state where they are resident. So I believe all of this they have to look at critically in order for us to be able to achieve this. Otherwise, we are not going to have enough, the kind of mileage that we ought to.
Rotimi, we all sit down here on television and we talk about the stock market on a daily basis. But if you talk to the political office holders, you talk to public officials and civil servants, they hardly talk about the stock market. They just seem that they just don't care. So in terms of policies, we make budget every year, and we talk about budget breakdown, we talk about economic roadmap, and nobody mentions the stock market. Nobody, virtually nobody.
Well, I think the top management of Securities and Exchange Commission and also the management of Nigerian Stock Exchange, I think they may have to step up their efforts concerning this. They really need to go political. They need to sort of align themselves with what really happens. Well, like you rightly mentioned, in the budget formation, we are not seeing much talk or much input concerning the Nigerian stock market. And we see that it is only through the stock market that there can be capital formation for the growth of the economy. So I believe that SEC needs to have more harmonized relationship with all other agencies and also with the National Assembly in order for us to be able to formulate strategies that will actually make us to arrive in a situation whereby there can be more offers in the market, and every offer that comes, they definitely succeed. So for me, I believe strongly that SEC has much to do at this time. The collaboration has to be stepped up, and also the cooperation has to be enhanced. And I believe with all of this, we're definitely going to achieve what we ought to achieve.
Rotimi, hanging in there for a few more questions with you in the studios there. Dangote Sugar just announced the retirement or the exit of the company secretary and the legal advisor. This is one big news for a sugar company, for this company, which is within the Dangote's basket. Hold on a second. We'll talk to you later in the program towards the end of the show. Rotimi Fakayijo, a market analyst. But a very quick one, the global market's been rattled this Friday because of the U.S. Killing of Qasem Soleimani, who is one of the Iranian military commanders, and that has sent stock markets into a tailspin around the world. Let's touch base with London very quickly, where Juliana Olayinka, my colleague, is standing by to give us a sense of how the London market is sharing in this day of decline across board on the equities market, and tell us how the sterling is performing. Juliana, good morning.
Good morning, Bosun.
Great to have you. How is the London market taking this big news as we step into the new year? A very quiet and decent Thursday. This is Friday. It all changed. Market is heading haywire.
Absolutely, Bosun. Anything can change in 24 hours. Yesterday, the FTSE 100 left on a high. It was 62 points higher. Of course, this breaking news that's happened overnight has set the FTSE and the equities market across the globe in a tailspin. The FTSE 100 opened about 0.3% lower this morning. It should have been worse off, but of course, considering just how important the Iranians are to the global crude oil scene, we've got a lot of the oil majors going much higher today. Brent crude, they're up 3%. BP, Royal Dutch Shell, they're all up by more than a percentage point as well. The sterling at the moment slightly down against the dollar. But look, you know, the killing of Qasem Soleimani, who I may add was one of the most important pivotal figures in Iran's foreign diplomacy, not just in the military, but he really was hand in hand with the supreme leader and the Minister of Foreign Affairs. We know that America have just issued an urgent warning and a message to their citizens, both in Iraq and Iran, telling them to leave immediately, because Iran and all the media that they're given, and they are speaking a lot in British press, they have declared this an act of war. They've compared it to the killing of somebody like the US Secretary of State, Mike Pompeo. So it's very serious and it is escalating. Bringing it back to Britain and how the British see this, British soldiers that were deployed to that region, they knew Soleimani by name. He was very feared, very revered international figure for British troops. So this is likely to escalate. How will it affect the economy? Well, we know that the Gulf is a region that Iran has strategic access to. Some are saying that there could perhaps be a resumption of attacking ships. And of course, we know what happened with Aramco last year and the alleged Iranian attack on their infrastructure. A lot of people are saying we could potentially expect some of these major oil facilities to be attacked by Tehran imminently.
Not a particularly good day, as you're putting it there, Juliana, because other markets indices in Europe are falling even deeper than their Asian counterparts, who are already in bed by now if they're not watching the TV, and see how the European and the US Wall Street will open for today. What about the pound sterling? I can see that major currencies are also taking a dip.
Well, the last time I checked, before I jumped into the studio, the pound was just slightly down against the dollar by about 0.3%. That may change at intraday because, of course, we know that oil is booming at the moment. And typically when the FTSE does pretty well, the pound doesn't do so well. So I presume over the next couple of hours that is likely to change. It's interesting you mentioned Asia. Even the Dow Jones and the S&P 500, that really slipped. And it appeared just as we were getting away from last year's biggest economic story, which was US-China, that this has completely shaped the way things are going. And again, like I said, we've heard from the US. We know that Iran are giving a series of media interviews at the moment. But, who knows, by intraday, by the time I'm checking in with Chimeze at lunchtime, another major global factor could have happened.
Yes, you're very correct. As you said earlier about the pound sterling, you saw about 0.3 dip. Is now about 0.45% dip. That means it's not really getting any slightly better. The dollar index is also just trying to get a recovery of 0.11%. Flight to safety today. I'll leave you and Chimeze in the afternoon to drill down on other big stories making the headlines out of the London market. Thank you so much, Juliana Layinka, my colleague from our studios at Cavendish Square. Let's take a break. When we come back, we checked in with our first primary market auction at the Treasury space by the Central Bank in 2020.